Welcome back. We're just a few minutes away from the opening bell on Wall Street following that big and lower than expected CPI index report. But first, earnings analysis. Shares of salad chain Sweetgreen are looking like sour green this morning after the company missed on earnings last night and really just had a challenging earnings call, guys. Wow. And a lot of other retailers warning about a slowdown starting around Memorial Day. Sweetgreen also noting the same thing. They also said sales have continued to decelerate, I believe, into this current quarter, but still moving forward with an aggressive pace of store openings, looking to have 1,000 stores open over the next decade.
Yeah, same-store sales change of 16% versus which they saw 86% in the prior year period. Now, here's the other thing, too. The digital revenue percentage, because this is a company that also had relied so much on that ability to have people go through a mobile ordering process or order online and then just walk in the store and pick it up. That kind of seamless order transaction. And the total digital revenue percentage of 62%, own digital revenue percentage of 40%, that particularly here comes into focus because they're still not able to get into the same kind of pie of the number of, the footprint that they had to just be able to drop off at those outposts prior to the pandemic. And so that was a considerable effort for them to be able to take on more customers.
Right. And one more red flag I want to point to, and this came from the company's conference call last night. They are probably not going to achieve profitability until 2024. That is a red flag in this quarter from the company. The street definitely not liking to hear that.
What's interesting to me here is as we start to get more of the restaurant chains reporting, you're starting to see differentiation. So it's not like, for example, in retail where you see, a pullback across the board in the same kind of areas. Yeah. Chipotle is doing fine. McDonald's is doing fine. So what is different here about Sweetgreen that it is seeing weakening demand? It tends to be more concentrated in urban areas, right? It's office workers who are going. Maybe that's part of it, although it seems like other chains that are seeing those kinds of trends are doing okay. So it's a little bit confusing, honestly, why.
I think it's portion sizes.
I think it's portion. It's not enough food. Are you messing with me?
No, I'm serious.
All right, there's the opening bell here on this Wednesday CPI morning with some expected strength here in the major averages on the back of lighter than expected, softer than expected, colder than expected inflation growth. We always say it's hotter. We say it's colder when it doesn't grow as much.
Chilly.
It's a little breezier, perhaps. It's not cold. Anyway, all of that equals a higher open for stocks here this morning.
Quickly clarify. I just think the portion sizes at Chipotle are a lot larger than Sweetgreen. It's not a knock on Sweetgreen food. It's tasty. And then secondarily, it's gotten pricey. It's just another restaurant chain that's pushed through price increases that, wow, your order could come out to over $25 if you have it delivered. That's a wallet hit.
Well,
your two bowls at Chipotle are $22 a piece.
Well, we're talking about Sweetgreen right now,
more
Brad.
than that.
You're on fire. You're taking Julie to task.
But again, the difference is that Chipotle's also been raising prices, right?
Yes.
So maybe to your point, maybe people feel like they're getting more value for their money there. Who knows? But I'll be interested to dig a little bit more into Sweetgreen and see what's going on there.